I think Bitcoin deserves a 5% allocation in all your portfolios. I think gold does. But when I get pissed off is when people say all your money should be in gold because the dollar's going to lose reserve currency. A lot of people say that Bitcoin, I'm going to hold on to it forever. And now they're realizing that that's not smart. You should never, ever have an investment that you hold forever. That should not be your thesis. Your thesis has to change when the facts change. So maybe you still want to hold, maybe the facts have not changed, but you know what has changed? The amount of leverage in this industry, which didn't come from institutions. And that's why for us, at least for me, I'm bullish on Bitcoin because institutions are finally going to be able to offer this to retirees. And now you're going to see real money come into this, right? And that moved to 60,000 plus 66,000, whatever the high was of Bitcoin. That's retail only. And now it turns out it's probably more like, 20,000. The rest is all leverage that's coming out of the market. But now it's providing opportunity because the innovation's there. But there's such a middle ground where I don't agree with Michael Saylor, what he's doing. He likes Bitcoin. That's good for him. To put your cash balance in Bitcoin instead of cash, that's not a strategy. It's not a prudent strategy. It's not. I mean, right now, MicroStrategy is a crypto company. They're not a software company, which is crazy. So maybe he wants to change the identity of his company, but he's like, well, it's a store of value and it's going up. It's fine, and you're still buying it, but keeping it in cash, and people can say, well, inflation's there. Nobody really cares about inflation right now, because if you had your whole portfolio in cash in 9 months, you're not bitching about inflation. You're like celebrating because you didn't lose 30% in your portfolio, right? So you're not saying, oh, well, inflation, they say, well, inflation is going to, destroy the purchasing power. Well, you know what? Go down 35%, 40%, some people down 60%, 70% in their portfolios, and you see that how much you wish you were in cash right now. But there's a big middle ground, because when you look at and I keep saying the innovation that's coming out, and this is an innovation where I'm talking about just EVs or 5G. I mean, this has changed the world, changed every industry, technology, when it comes to the metaverse, when it comes to NFTs, when it comes to ownership of your digital assets, when it comes to Facebook changing, who was one of the owners, one of the probably 5 owners of the internet, where close to 3 billion people are on their platform, right? And they monitor every single thing. And they're changing their business model because the way it is. And I just read a story about TikTok as well. TikTok, and this is more fuel for metaverse, more fuel for ownership of your properties. But TikTok, there was, I think it was a senator or something came out and said, or somebody said that Apple and Google shouldn't offer the app anymore. If that happens, holy cow. That means nobody can really have access to TikTok, right? So you can only have access because of the Apple phone. That's like, if it comes down to that and Google and Apple do that, you know what? AT&T and Verizon should shut them off. They should shut off the networks and say, okay, you want to shut everyone else out because you guys have a duopoly? Then, we should shut you out. Of course, it's never going to happen because everybody loses tens of billions, hundreds of billions of dollars. I'm just saying imagine you don't have those layers where you're dependent on someone where just a flick of a switch, everything you own, everything you've ever created is gone. I mean, this is where we're going. This is why billions of dollars are flowing into this industry. In the meantime, this does remind me, Daniel, of 1999, 2000, when you saw a lot of shitty companies coming out, lots of leverage. But look what happened when you had the wipeout. And it took a couple of years. But who survived? Microsoft, Amazon, Apple. And right now, that's Binance, FTX, right? These are the companies that are providing these bailouts that if you survive through this, and look, the whole digital Voyager thing, I don't know what Voyager was thinking. And this is a company we had in our portfolio. We made a lot of money on. We sold it a while ago. And now it's down tremendously. It's a $100 million market cap now. And they're looking for a $650 million payment from 3 Arrows, which they're obviously not going to get, which is, I think, with total package all in is like $650 million. But how is a company like Voyager lending them this money? They just did a private placement recently in June. You're lending them this money, and it was for Bitcoins and it was back, whatever, stablecoin, USDC. I don't get it, because when you have our markets, Dan, when you're looking at this market, we see the credit ratings, we see, and that allows us to determine, we get to see the interest rate on that debt, we get to see the maturities, we get to see how much cash flow is coming in, we get to see all these numbers. And I think this thing in DeFi, DeFi can't be 100% DeFi. We're realizing that, because when you lose your money, you have no one to go to. And you need some kind of centralization on top of that, a little bit, where DeFi is going to lower your fees, because every banks and investment firms, they charge massive amount of fees. We all know that from having our money in the banks and investing in anything or wiring money. But there's such a huge middle ground of innovation that I think people are missing here, where it's like all the diehards say, I told you Bitcoin's going to zero. It's still 20,000. You said it was going to zero at 300, 1,000, 5,000, 20,000, 50,000, 60,000. So you were dead wrong, even though it's come down. And then you have the other saying, you have to hold forever, because isn't this somebody just came out with a massive target price for next year or something?
Yeah, but that's not just somebody. This is Tim, is it Draper or Draper? Yeah. So venture capitalist, crazy successful guy. I love reading all of his stuff in interviews. But this interview, I'm reading from Forbes here, and it opens up and says, during an interview with Forbes in January of this year, Frank, the venture capitalist said he had an ambitious prediction. He says Bitcoin would hit a whopping $250,000 a coin in a year. Now, at the time, January, it was around 41,000. Obviously, Frank, that predictions can still last. Bitcoin has been cut in half. And the article goes on to say that he was reached by email, and he says, I am more convinced than ever that it is happening, meaning his development and price targets. Now he just says by late 2020 or 2023. What he says is he's just talking about, hey, there's a lot of innovation coming.
So he's predicting 250 by 2023.
Yeah, let's give him the end of next year. And yeah, he's just saying, because it was 41,000, got cut in half, and it says, but Draper isn't backing off, reached over email. He reiterated his price target, quote, and said, I am more convinced than ever that it is happening. It meaning the development explosion, I'm guessing.
Yeah.
The Forbes article goes on to list a couple of the biggest players and wealthiest people. So CZ, the CEO, of Binance, the largest crypto trading by volume, his net worth on March 11th, Frank. Now take this with a grain of salt, because he's already pushed back. CZ has already pushed back on Twitter about these numbers. March 11th, Frank, his net worth was an easy $65 billion. On June 22nd, it went to 18.7. You think that's where you share private jets, or you think you still own your?
No, you're still doing fine.
Still got your okay.
I think you're still doing.
This is your world, not mine. Sam Bankman-Fried, who
that's another level. I've been to parties like that. It's another freaking level. I've been.
Hey, out of the two of us, who's ridden on a private plane very recently?
Yes.
Moving
I've
on.
Been to an event and a fundraiser, man. That it was crazy. It was you know I don't feel uncomfortable off. Not that I felt uncomfortable, but these are people who are building cities that $1 billion is nothing to them, and it's another level. It's another level of conversation. It's like okay, yeah. Anyway, but yeah, and CZ is I love him. I like him a lot. I think he's one of the most transparent people in the industry. I know Binance. He tweets a lot. One of the things that he said recently, which I loved in his tweet, and one of the things that we love to do here, is he said we have to stop teaching cryptos like from an IP standpoint, because nobody's going to understand them. We need to simplify this. And this is a couple of days ago, and it's tough. Like, you don't know everything that goes behind the scenes in a brokerage firm. They made it so easy where you just open an account and you could trade, right? And everything's linked together. Now, it's in crypto, it's not like that. It's very difficult, especially some tokens where you have to swap them on PancakeSwap or Uniswap and do all this shit. And then, you like the KYC, AML, what are they looking at? Know your customer and anti-laundering and stuff like that. They're doing all that already, but it's like all this stuff has to be kind of explained to you and put in writing and making sure, and the stamp of approval in the US. There just needs to be regulation here. That's it. There needs to be regulation behind this, because there's a lot of garbage and a lot of shit, and you need those protections if you're going to get in the average investor. And plus, if you're going to get in the institutions. Because you're looking at these institutions, and in Galaxy Digital is invested in a lot of these companies, Daniel, a lot of them. And you're seeing 90% drops across the board, even the good names. Why? Because, when you see a company like Voyager Digital, probably is going to go bust. If they don't get this payment, which it doesn't look like they're going to get this payment. But the amount of leverage that's taking place out there is insane. And you're seeing Celsius halting withdrawals. You're seeing BlockFi, FTX bailout BlockFi, and they're not calling a bailout BlockFi. And I interviewed Zach Prince, who's a great guy. That valuation, I think, was $6 billion. I think it's under $1 billion now. But they said, hey, we're fine. We're cash flow positive. We're generating money right now, but it's smart to raise money in this type of market. It didn't seem like that. But a lot of these guys who are offering, which is BlockFi and a lot of these other platforms and Voyager app and stuff like that, where you are these massive rates, story tokens, and you get 10%, 12%. Guys, if you generate 12% interest, that means these companies have to be generating more than that to pay you, right? So it's almost like a Ponzi scheme type of thing, because now we have higher interest rates and you've seen demand come down. Well, now how do you pay that, right? It's the only way you could pay that. It's the only way it could be sustainable, right? That's why banks have, are paying a certain amount. If you're going to go that much higher, and again, 0 is crazy for bank accounts, checking accounts. And again, it should be raised significantly now, interest rates going higher. But when you're paying interest like that, much higher than the S&P 500, which is whatever, it's like 2.7%. You got to question it, right? You got to look at it and say, why? Why is this happening? When I looked at details, you can't find out the information anywhere. Like I went into digital, Voyager Digital. I looked at private placement. It was a pipe. And I'm trying to figure out, they raised $60 million and I'm trying to find out when they lent this money. And I can't even find out when they did. I have to dig further and further and further and further. And this is a publicly traded company. Granted, they are not on a major exchange, right? They're on, the Toronto exchange. But they also trade on, the pig sheets. So when I'm looking at this and I can't even see some of this stuff, it's frustrating because when I did the research on it, I was able to see a lot of this stuff and it was fine. But I didn't know about this massive freaking loan that they, this has to be reported. This is material information if you're a public company. But a lot of these people, as Luna, Terra, 60 billion wiped off these market caps, Celsius now halting withdrawals. You don't know what's going on under the hood. And that's the problem. Because you can't see it. And when you have no regulation and these companies don't, that's why I think security tokens is going to be huge because there are legit, really good companies that want to do good by shareholders, that they're going to share their information and say, this is what we're doing, this is what we're investing in. But when you have these things and they're saying, well, not securities, you're not securities. Well, I'm down 85% on it. And I thought I was going to make money because of your great technology. Everyone believes they're investing in it as a security. You know, it's a security. You're making money. You sold some of your stock, which you're not even listing anyway. Where the fuck it is. You don't know how much these guys are dumping right now, the insider holders. You don't know anything. So for a lot of these, it's all tied to the utility of the token. And if that's not working, then these things are worthless. And that's why researching them, I was amazed. I was like, 90% of these are shit and garbage. And you're seeing that get wiped out. But don't be discouraged to the point where, there's amazing technologies in here that's coming out of crypto and blockchain that we've never seen. That's changing the landscape. There's a reason why institutions are all getting in. There's a reason why Jamie Dimon changed his mind. He hates Bitcoin. He changed his mind because his clients are dying for it. You're looking at Ethereum and NFTs and that platform and other blockchains. This makes sense. These are like software companies, but you're going to see this wipeout is extremely painful. And I get it. But, if you invested a while ago, at least for the most part, we did very, very well at the beginning, but now you're seeing this total collapse. But I think it's going to lead to a lot of great opportunities going forward. So I think you're right on that, Daniel.